how do I add stocks to my watch list for my $67,000 stock portfolio? Let's dig into it. The first thing you need to establish is your own risk profile. So for myself, I'm looking to the long term for this portfolio, and I'm skewing towards growth because I'm trying to beat the S&P 500 or the overall stock market. And the reason it's important to compare versus the overall stock market is because you can easily just invest in something like VOO or SPY and get these stock market returns without putting in any work. So looking at the last 100 years, inflation adjusted, you can get around 7.5%. My overall goal is to beat that average yearly return, and I'm looking at growth companies because those are the ones that tend to outperform the market. Now, I'm looking for what I call conservative growth or compounders. So companies that are growing their bottom line and top line greater than 10%, and there's no cap to that, but I'm looking at a little bit more stable companies. So those are the ones that aren't probably going to be in the hyper growth period. So I'll use something like finviz.com, go to the earnings per share growth over the next 5 years and look for something that's over 10%. You can also scan for PEG ratio. So something under 2 means that the valuation when you're comparing the expected growth rate of net income versus the current PE ratio of the company isn't crazy. So under 2 means that the valuation is relatively okay. Something else I'll do is I'll look at a sector. If I think that I'm underweight in a specific sector, then I'll look for stocks that I believe are the best in that sector to add to the portfolio. I don't always do this, but if I do believe that there's a certain sector that will outperform in the medium to long term and it's currently being crushed, I'll look there. So that's when I have a list of companies, and usually what I'm looking at first are companies that I recognize and I think their brand is good or I'm familiar with their product. Those are the ones that I'm probably going to jump in at first. And just because they popped in the screener doesn't mean that it's a good buy. So this is where I'm looking at the specific company and I start to dig in a little deeper. So I'm looking at the financials, I'm looking at the growth rate, I'm looking at the valuation relative to that growth rate. And that's when I decide whether or not this stock is a company that I'd like to add to the watch list. And then I establish a certain price that I want to buy the stock at. So for Autodesk specifically, I'm looking to buy the stock around 190. So it's at 220. So I'm kind of holding on for a dip in the stock in order to enter a position. So on a weekly basis, when I'm looking at what I'll be putting money into or capital, I'll look at stocks that are currently in the portfolio. I'll look at the stocks that are in my watch list, see which one I think is trading at the deepest discount, or if I'm, again, underweight in a certain sector, maybe I need to allocate some dollars towards a company in that sector. That's kind of how I decide on a weekly basis where to be putting my capital dollars in the portfolio. Hope that helps.